What if I told you that some of the most dangerous battles against terrorism are not being fought in Sambisa Forest, the Lake Chad Basin, or the forests of the Northwest? What if the real battlefield is sitting quietly inside bank databases, money transfer records, and currency exchange offices? Think about that for a moment. Every terrorist attack requires money. Every kidnapping network requires money. Every criminal organization needs funding. Weapons cost money. Vehicles cost money. Communication costs money. Recruitment costs money. And without money, many terrorist organizations simply cannot survive. This is why a recent directive from the Central Bank of Nigeria has attracted enormous attention. The CBN has instructed banks to freeze accounts linked to 6 terrorism financing suspects and 4 bureaux de change. At first glance, this may seem like just another regulatory announcement, but beneath that headline lies a much deeper story. A story about how money moves through financial systems, a story about national security, a story about financial intelligence, and a story that affects every Nigerian who keeps money in a bank, uses a transfer service, or exchanges foreign currency. Tonight, we are following the money trade, because in the modern world, if you want to understand crime, insecurity, or terrorism, you must first understand where the money comes from and where it goes. And the question we must ask are simple. How serious is this development? What exactly have investigators uncovered? And most importantly, is Nigeria winning the war against terrorism financing? That is the big question we're asking tonight on the analysis, and let's investigate. Yes, of course, the Central Bank of Nigeria recently directed financial institutions to immediately identify and freeze all accounts connected to 6 individuals and 4 bureaux de change suspected of involvement in terrorism financing activities. The directive reportedly requires bank and financial institutions to place restrictions on the identified accounts and report compliance to relevant authorities. Such directives do not emerge in isolation. They are usually part of a broader framework involving financial intelligence gathering, regulatory oversight, law enforcement investigations, and national security assessments. The individuals involved are suspected of participating in activities linked to the financing of terrorism. It's important to emphasize a critical principle. A freeze order is not the same as a criminal conviction. The purpose is to prevent potential suspicious funds from being moved while investigations continues. Why is this significant? Because investigators increasingly believe that tracking money flows can reveal networks that remain hidden from traditional security operations. The inclusion of bureaux de change is particularly noteworthy. Bureaux de change serve legitimate purposes in the economy. They facilitate currency exchange for travelers, businesses, and investors. However, around the world, currency exchange operations have also attracted scrutiny from regulators because they can potentially be exploited to move funds across borders or disguise the origin of money. This is why anti-money laundering authorities pay close attention to transactions involving currency exchanges. The bigger question is not simply who these suspects are. The bigger question is what investigators believe these financial activities reveal about larger networks operating behind the scenes. That brings us to the heart of this story. Follow the money. Yes, of course, on today's episode of the analysis, we are following the money, and this is the money trade concerning the insecurity that has bedeviled our country, Nigeria. One of the biggest misconceptions about terrorism is that it operates entirely outside the formal economy. In reality, terrorist financing often intersects with legitimate financial systems. Global terrorism financing can take many forms. It may involve cash deposits, it may involve business fronts, it may involve charities being abused, it may involve international money transfers, it may involve trade transactions, it may involve informal transfer systems, or it may involve currency exchange channels. Imagine a river the terrorist attack you see on television is the river's mouth, but somewhere upstream are dozens of tributaries supplying the water. The weapons supplier, the transporter, the recruiter, the financier, the courier, the facilitator. Each leaves behind financial footprints. This is why financial intelligence has become one of the most powerful weapons in modern counter-terrorism. Military operations can target fighters. Financial investigations target the infrastructure that sustains them. In many cases, prison fund can be as disruptive as arresting operatives. The terrorist organization, deprived of money, faces enormous operational difficulties. It struggles to recruit. It struggles to move personnel. It struggles to acquire equipment. It struggles to sustain attacks. That is what we are talking about the freezing of some personalities' accounts in this regard. The strategy has been used worldwide. From the United States after 9/11 to European counter-terrorism agencies and international financial watchdog, the lesson has been consistent. Cut off the money and you weaken the network. The challenge, however, is that financial criminals constantly adapt. They use complex structures, multiple accounts, third-party intermediaries, cross-border transfers, cash-intensive businesses, and increasingly sophisticated methods to avoid detection. This creates a constant cat and mouse game between regulators and criminal networks. Nigeria's security challenges have persisted for years, from insurgency in the northeast to banditry in parts of the northwest, kidnapping networks, and other organized criminal activities. One reality remains constant. These operations require funding. No armed group survives without resources. Food costs money, fuel costs money, ammunition costs money, transportation costs money, information gathering costs money. Financial support networks are therefore often the invisible backbone of insecurity. This is why experts frequently argue that counterterrorism cannot rely solely on military force. Security operations may neutralize threats on the ground, but unless financial pipelines are disrupted, new threats can emerge. The relationship between money and insecurity is direct. The easier it is for illicit funds to move undetected, the easier it becomes for criminal organizations to sustain themselves. Conversely, the more effective financial monitoring becomes, the more difficult it becomes for such networks to operate. Nigeria has made significant effort over the years to strengthen anti-money laundering and counter-terrorism financing framework. But financial institutions have become more sophisticated. Regulatory agencies have expanded monitoring systems. International cooperation has increased, no doubt, yet challenges remain. The sheer size of the economy, large volume of cash transactions, informal financial channels, cross-border trade activities, and evolving criminal tactics all create vulnerability. This latest action by the CBN demonstrates that authorities continue to view financial surveillance as a critical component of national security, because every suspicious transaction potentially tells a story, and every story will lead investigators closer to understanding how criminal networks survive. What this means for Nigerian bank? Of course, you expect it's going to be a blow, it's going to be a shaker. For banks, this development sends a clear message. Compliance is no longer optional. Financial institutions occupy the front line of financial security. Their responsibility extends far beyond holding deposits. Banks are expected to know their customers. This principle is commonly referred to as KYC, know your customer. Who is opening the account? What is the source of fund? Do transaction patterns match the customer's profile? Are there unusual transfers? Are there suspicious activities? These questions form the foundation of modern banking compliance. When banks fail to identify suspicious transactions, the consequences can be severe. Regulatory sanctions, Financial penalties. Reputational damage can also be one of the consequences, and in some cases, international scrutiny. This is particularly important because Nigeria operates within a global financial system. Yes, of course, Nigeria's financial system is not in isolation. International partners exploit robust anti-money laundering control. Any perception of weakness can create broader economic consequences. Banks therefore face a delicate balancing act. They must provide efficient financial services while simultaneously serving as guardians against financial abuse. That responsibility is becoming increasingly complex in a digital era. Now the bureau de change question. Now let's discuss the aspects generating the most debate: the inclusion of bureau de change. Why are BDCs often scrutinized? The answer lies in the nature of currency exchange itself. Currency conversion can create opportunities for obscuring transaction trials. Funds may move through multiple currencies. Transactions may occur across different jurisdictions. Large volumes of cash may be involved. Again, this does not mean that bureau de change are inherently problematic. Far from it. Most operate legally and provide valuable services. However, regulators worldwide recognize that currency exchange businesses require strong oversight because they can potentially be exploited by criminals seeking to conceive financial activities. The key issue is transparency. Can regulators accurately identify the source of funds? Can they track the movement of money? Can they verify the legitimacy of transactions? Where gap exists, criminals may attempt to exploit them. This raises broader questions about regulatory reform. Are reporting requirements sufficient? Are monitoring technologies keeping pace with evolving threats? Are compliance standards being enforced consistently? These are questions policymakers may increasingly confront in the years ahead. Now, the bigger national security picture. National security is often viewed through a military lens. Soldiers, weapons, operations, intelligence gathering. But financial security is equally important. A nation cannot effectively combat terrorism if illicit funding networks continue operating unchecked. Financial crimes create ripple effects throughout the economy. It undermines trust, it distorts the market, it weakens institutions, it discourages investment, and it damages international confidence. Investors pay attention to governance. They pay attention to financial integrity. They pay attention to regulatory effectiveness. A country perceived as aggressively combating illicit finance often strengthens its international standing. A country perceived as failing to do so risks reputational consequences. Therefore, this issue extends beyond banking. It extends beyond security agencies. It affects the entire economy, and ultimately, it affects every citizen. There are questions Nigerians should ask. As investigations continue, several important questions deserve attention. First, is this an isolated case, or does it point to a broader network that investigators are still uncovering? Second, how effective are current financial monitoring systems we have? Are suspicious transactions being detected quickly enough, or sometimes detected and covered up? Third, what additional safeguards may be necessary to strengthen financial security? Fourth, how closely are regulatory agencies, banks, intelligence services, and law enforcement cooperating? Finally, will this investigation lead to broader reform capable of preventing future abuse? These questions matter because successful counterterrorism depends not only on reacting to threats, but also on preventing them. So, in conclusion, the modern face of terrorism is not always visible. Sometimes it hides behind spreadsheets. Sometimes it hides behind transaction records. Sometimes it hides behind seemingly ordinary financial activity. This is why actions such as freezing suspicious accounts carry significance far beyond the individuals involved. This represents an attempt to disrupt the financial lifeblood that sustains criminal and terrorist networks. The lesson from around the world is clear. Terrorist organization can survive military pressure, but sustained financial pressure can cripple your ability to operate. As Nigeria continues its fight against insecurity, the battle will not be won only on the battlefield. It will also be fought inside banks, inside compliance departments, inside intelligence units, and inside regulatory institutions tasked with protecting the integrity of the financial system. The freezing of these accounts may not be the chapter that closes the story. The freezing of these accounts may be one chapter in a much larger story. A story about money, power, security, and the future of Nigeria. The question now is this: as financial criminals become more sophisticated and terrorism financing network evolve, is Nigeria moving faster than the threat it faces, or is the country still chasing shadows in the financial war that has become increasingly complex? Only time and the outcome of ongoing investigations will tell. I'm interested in hearing your thoughts. Do you believe Nigeria's financial monitoring system are strong enough to detect and stop terrorism financing before it fuels insecurity? Let's know in the comments. And if you found this analysis valuable, subscribe for more in-depth investigations into the story shaping Nigeria and the world. Until next time, stay informed and follow the money. I remain yours truly, Joseph Osamu Igwan, aka Jojo Money. Have a nice day.